Hey, my name's James Wilkinson. Welcome to my YouTube channel. Now, in this video, we want to talk about what happens at the end of an interest-only mortgage. You see, some of you are probably considering going interest-only, as Jeremy Hunt has announced that you can move your repayment mortgage, your residential mortgage, to an interest-only payment. Now, it's only for 6 months initially, but it might continue. My bet is that it will continue for quite a while after that 6 months. Normally these government schemes, things like the bounce back loans, the furlough scheme, they all got extended again and again and again because the problem wasn't fixed, and we're not going to fix the interest rates in 6 months for sure. So before we jump into this, we're going to talk about what do you do at the end of an interest-only mortgage. But you need to do me two quick favours. One is smash the subscribe button and hit the bell notification. I've got new content every single day. And also, smash the like button, guys. That really helps me with the YouTube algorithm. So quickly do that now. Smash that like button, and then we'll carry on. So, interest-only mortgages. How do they work? Well, normally, an interest-only mortgage is only for buy-to-let. They're not really for residential. However, as I said, because of the cost of living crisis, interest rates going up, inflation not going down, Jeremy Hunt has negotiated with 85% of the UK banks, which is pretty much all of them, the others will probably fall in line as well, that you can switch your mortgage to interest only. So what that means is maybe you pay £1,000 a month on your mortgage payment, and half of that goes to paying down the debt. So 500 quid, let's just say you pay £1,000, and £500 is going towards the balance, and £500 is going towards the interest. So what the government are effectively saying is that you can stop this part of the payment and just have this, which for a lot of people in this market is going to help them. Now, that potentially could delay a property crash. It could mean a property crash is not going to be as deep. No one knows for sure how this is going to end up, but it is good news, and it is going to help people that get in really difficult times, and that's important that we have that in this sort of environment for sure. So let's look at how an interest-only mortgage works. How does it work? Well, first off, we need to look at a repayment mortgage. So let's just say this is a balance here of 100k, and this is 25 years between here. So what would normally happen is, as a residential landlord, as a residential homeowner, the house that you live in, you might borrow £100,000, and over the years, the money that you owe is going down, isn't it? And that's because you're paying back the interest and you're paying back part of the balance. And so over time, you become mortgage free. That's the goal of a lot of people, and that's what a lot of people strive for, is to be mortgage free. Not me, but that's what lots of people want to do. Now, that's obvious. That's how that works, and that's called a repayment mortgage. If you're in a residential property where you live in it, 99% of the time, that's what you've got. Now, if you're a buy-to-let landlord, you borrow £100,000, and in 25 years, you still owe £100,000. That does not go down. And that's because you're just paying the interest part of that loan. That's important to understand. And so a lot of people worry about that. They think, well, I'm a landlord, I'm going to owe 100 grand. Maybe I'll be retired in that situation. So what can you do to get this sorted? And do you need to worry about it? Well, one thing that you can do is maybe halfway through, you could switch to a repayment mortgage. That is an option. And so here you could start paying down your balance. Now, your payments would be a little bit bigger. But that is an opportunity for you to do that. So halfway through the mortgage, you could switch it on to repayment. That's one option. Or what you could do, what I would be more likely to do, is just take a new mortgage out. You see, the bank isn't that concerned that you pay down the debt on a buy-to-let mortgage. They want to make sure that the deal is has some equity in it and that it really stacks up and there's no risk for them. That's what they will be checking. If there's no risk or a low risk, because there's always some risk, if there is a low risk, they will lend you that money indefinitely. So what I would do is at the 25-year point or before, because you can get a 5-year deal or a 2-year deal, I would just extend that loan and start again. Now, here's what's going to be happening to your house price if things go as they normally do. Since 1066, house prices have doubled. Now, while you're watching this video, a lot of people are going to have the belief that that isn't going to happen again because we're going through a bit of a rocky period and a downturn. Now, one thing is that if you buy in this downturn, obviously you're buying at a discount. So it's more likely to happen for you. And two, we still have a massive shortage of houses. No one's fixing that anytime soon. We have more people in the country than ever before. We have record immigration. We are living longer. There are lots of things that indicate that we will not have enough houses and they're not doing enough to fix that. So let's look at your house value. It starts at 100K. And then ideally, and if you learn property investing so you can add value, this will happen quicker. But 10 years later, that house is now worth 200K, right? And 10 years after that, so 20 years after you bought it, the house is now worth 400K. Now you've got options here. As we said, you can take out an additional mortgage, so you can just put that on and your house is worth 400K, you're only 100K, you're not going to worry about it. And 100K in 20 years from now is not going to feel the same as it does today. When I started work in 97 in Burger King, right? We were on £3 per hour back then. And because of inflation, wages have gone up. And so the minimum wage now, well, you wouldn't get anyone in Dorking in Surrey for less than £11. So it's nearly 4 times the salary. People talk about Freddos, the chocolate bars, right? They used to be 5 pence, then they were 10 pence. Now they were 20 pence, and I think they're about 30 pence now. Things go up. And so the 100 grand isn't actually worth 100 grand in today's money. It will feel affordable. So you could flip this, you'll have a 100 grand house with 100 grand debt. You could flip that onto a repayment mortgage, or you could sell the house. Now, if you sold the house, you'd pay back the 100 grand in debt and you would walk away with 300K before taxes. You're going to have to pay capital gains tax on that. But this is what happens on a interest-only mortgage. Now, one side note that I would do is when this house has gone up in value to £200,000, I owe 100,000 on that property, I'm able to borrow 75% loan to value, which means they will lend me £150,000. I would release 50 grand of equity in that scenario, and I'd use that to invest in further properties. That's how you grow a property portfolio. We've got tons of videos on that on this channel. But if you really want to know how to be a property investor, especially in these absolutely great, fantastic opportunity of a time at the moment, why not join the Property Accelerator? It's £1. You get access to all of my training programs. I'm going to put a link below. Go and at least check it out. See what it's all about. Give us a shot. 7-day trial for £1. Can't say fairer than that. And you could learn how to do this property investing stuff yourself. Do check out all the other content on my channel. Do subscribe, like the channel as well. And do check out this video right here.